So apparently, thank you, Michael. All right, you can hear me now. Sayed, good morning and welcome to this. I don't know why this new computer keeps turning off my microphone, even though it's on. It's just a little button on the console, right? So there's like this, in the old days where you had all these knobs and these dials for your radio. Well, I have a microphone, then I have this console, and for whatever reason, whenever I restart my computer or I get a power surge, the sucker turns off automatically. I don't know it. But now I'm getting used to it because it's happening practically every day. So now I will look for it every single day. These are habits. I have to build them. Anyway, good morning. It's Monday. Yeah. And it's a shortened trading week. So I was just mentioning, obviously, I did some posts this weekend. And you'll also know that Scott Treasury as U.S. Secretary, the U.S. Secretary of Treasury is in, and this is causing bonds a wee bounce. Just kind of keep in mind, I'm expecting this July 1st to kind of hold, right? So now let's look at this pre-market. I'm on a 2-hour, okay? 2-hour pre-market. Bonds are having a wee bit bounce on, I guess, the expectations of some stabilization from the billionaire hedge fund, golden child of Soros and Druckenmiller, Treasury Secretary Bessent, who had to duke it out with brass knuckles with Cantor Fitzgerald's CEO, Lutnick. Oh my goodness, is there like a soap opera expose on Fox Business this morning? Woo! Anyway, Cantor, Fitzgerald CEO Lutnick is so mad. He got relegated to some Department of Commerce job, which is very, very, very unsexy. And by the way, his firm does a lot of business with Tether, which is basically, they do a lot of business in currencies. They do a lot of business in Bitcoin. They manage the treasuries holdings for Tether. Tether is an unregulated, very sus kind of entity. So I think the whole thing is just gross, honestly. But the point is, he didn't get Treasury Secretary, Bessent did, and market's having a little excitement. Now, I got a head and shoulders right here, left shoulder, head, right shoulder. So that does imply that bonds should be a bid now. The only conflict that I have with that, and is this chart, which has not cooperated completely, perfectly, however you want to put it. This is the 10-year T-note futures, and I have been waiting for this tag of the gap fill on the daily, which has always been a very, very, very helpful rule of mine in my kind of technical analysis world. So I don't just go on macro, and heavens never just fundamentals, but technicals really do matter, and intermarket matters a lot to me. And I would really like to see that tag before I think bonds are a safe long, but I don't get to choose. They're having a little bounce this morning. And dollar is coming back in, which I did some more intermarket analysis, and I can show you it was quite elevated. So it's kind of a good thing that it's coming back in. Let me just fly over here real quick to that chart that I shared with you, big picture in intermarket last week. And hopefully you can see this. This is the Dixie, right? Remember, this is a basket relative to its peers. It doesn't measure gold. It doesn't measure commodities. It's not, anything but a basket of its peers in large part. And right now it has risen very strongly, as you can see, from that 200-day, which was 100.2. Remember, I was like, it's going to go tag 100.2. So it overshot a little bit and then did this. And here we are. We're right smack dab at this kind of 107.50 last week. I won't do that. I'll just do this. You can kind of see it. And it was already there. This trend line from 2011 on the Dixie basket, I didn't have to move that. That was already there, right? I got trend lines everywhere. Anyway, we get above that, it's going to look very, very interesting because, again, that just means, in my world anyway, that dollar is strengthening against its peers, the euro, the pound sterling, the yuan, the yen, but not necessarily relative to commodities. And I've also mentioned this repeatedly, that Jeffrey has a kind of a different system. It's very much based in classical economics, where he does not compare the dollar to FX. He thinks those are garbage currencies. And by the way, I get his logic. I had never thought of it before. Really, you don't hear anybody writing about yen as garbage currency, but the point is, or euro as garbage currency, but the point is they're political instruments. So they're not measuring real things. He's got a really good point. The yen is 100% a political instrument. So is the euro. So is the pound sterling. So when he put it in that framework, I'm like, oh my God, you're right. So relative to its peers, the dollar index that is derived from this basket can absolutely advance higher. No question. It doesn't mean it's gaining value. And that's where it really trips people up in a big, 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 big bad way. Relative to commodities, it is down 50%, he estimates, from pre-COVID. I'm talking about sugar and, things raw materials and food. Yes, also, gold and silver. One of the reasons why they are rising is all kinds of macro and geopolitical, but it's also relative to the dollar, and it smells that. So we have basically a situation where if this gets above into 110, 113, 115, because it was prior right up here, you can't see it, but it was literally 114.75, I think it was. It almost hit 115. If it gets back up there, market will start to, shake. And right now we're in a melt up. So it's not carrying one bit. It's in a melt up because the dollar is actually devaluing against things. So wrap your mind around that on a Monday morning. That's just what I wanted to kind of come up and say good morning to you about. Also, we have, let me just get this open. Oh, there we go. All right, so some updates here as it relates to Doge. For those who are following along, I put in macro to micro support, a good article out in follow-up to what I presented this weekend, or I should say last week, on how Doge is going to kind of come in and cut this budget. My market thoughts, I posted two things this weekend. The Trump trade, macro to micro, none of it's political. I wouldn't even know about the Treasury Secretary. This is about, again, all things related to for dollar and tariffs and fiscal restructuring and industrial, manufacturing renaissance and the rest. So this was just my best attempts to try and kind of figure out where we go from here, which I think in large part is very much focused on devaluing the dollar to offset tariffs. And so that's exporters obviously benefit and foreigners demand fewer dollars. So this is already in play. And I've got lots and lots of support that I keep finding for that. I had, as you can see, if you watch this presentation that I did for a Synergy conference, it was basically using my notes. I have not assembled those notes for clients, but I will this week. Okay, so you'll have the talking points. We were too busy last week. We had NVIDIA earnings. We had the cabinet appointments, which were like, oh my God, I was so focused on that. You have no idea. If you follow me on Twitter, you have an idea. But I didn't talk about it or write about it because I was just very focused on it. And then, of course, the war escalation, which is Iran and Israel, Russia and Ukraine. And I didn't talk about those things in any of the write-up this weekend, but I got to tell you, I'm thinking about this a lot. So I'll segue to that in just a minute. But you can find some of my notes here on the fact that we are coming into the most wonderful time of the year. I joke, but not really. It is really one of those things where the market is just freaking giddy. All the major houses are beyond excited about this seasonal period of the year in an election with Trump and Besant. So seasonality, corporate buybacks, new regime of pro-growth policies, deregulation, cutting taxes, et cetera, et cetera, et cetera. Oh my God, the animal spirits are ridiculous, and the dollar is devaluing every single day. So you've got, Scott Rubner out with literally his party. I think he's drunk already. Look at this. January is when capital gets deployed from the largest asset base. I placed my order for an SPX 7K hat. All right, all systems go. And by the way, I can't tell you how many are upping their targets to 7,500. It's a love fest of, exuberance. It's a love fest of exuberance. I'm seeing it everywhere. And that is exactly where the pit of my stomach starts to drop. Now, I know a lot of this you hear, analysis. But there's also this thing called trader's instinct. I am not feeling it, not even a little bit. So I think next year is going to be hellacious. And we'll talk about that a little bit more. Not right now. I don't want to scare you, but I do not agree with this at all. And I'll share that more as the week goes on. But for right now, I just want to get through. I did the write-up, which is to say everybody's bullish, right? We got corporate buybacks. We got the option flow is ridiculous. We've got tons and tons of spend year end, and no reason to take money off the table if taxes are going to be dropped. We've got tons and tons of CTAs, which is the trend insensitive buyers coming in. Anyway, tons and tons of higher prints. Palantir, for example, got another price upgrade to 75. Remember when it was 50 the past few months? That was the options market read. NVIDIA, they've got options in there 180. We're printing 140, but they want 180 by like March. So we have a major options structure that's bullish as well. All I can say is we'll talk about the wars. We'll talk about my gut instinct when I calm down a little bit, but I will tell you I was a little bit focused on that on Sunday. But I wrote this up on Saturday, wanted to get that out, and it's basically we've got a very bullish backdrop. Be careful now, chasing, because it will get melt up like, and we're already almost to that NDX tag of 100% return since January 2023. Okay, and MSTR buying more Bitcoin on Ether. So that's it. My mantra of outliers revert with velocity will be a thing next year. And I have lots of charts down here, by the way, that also expresses here's seasonality. Here we are. Go, go, go. And here's Besant, his 3-point plan, cut the budget deficit to 3% of gross domestic product. Good luck by that, but he's got it slowly. So it's not all at once. Yeah, I know. Spur GDP growth of 3% through deregulation. That'd be lovely. But with a whole bunch of headcounts rolling, it might be a little harder. And produce an additional 3 million barrels of oil or its equivalent a day. U.S. oil independence, and Trump is out this morning talking about how he wants to refund the SPR, the Strategic Petroleum Reserve. So these are two things, bullish and bullish. Right? Sounds so good on paper. We know how this works, right? All right. Anyway, but the flows have already come in. I mean, look at the equity flows. Oh my God, what a beautiful thing! Like never before. I mean, since I've been counting equity flows. All right, and then we've got even the past 3-month, rolling whatever. However, these are all Goldman, Morgan Stanley, all the stuff. They're just even the Morgan Stanley bear has come out with a 7,500 price target for next year. Really? Okay. Anyway, this is where we're at, and that's really all there's to say about it. And then, of course, I love this chart. Buy side positioning. Look at this. Wow. Look at that. It's the roaring 20s. Baby, get your dancing shoes on. All right, this is exactly where I start to go. Bleh. Don't like it. There's nothing about it I like. Okay, but for right now, I do like this fact that, of course, I've not been bearish. I can't be bearish against this backdrop. I'm not stupid. So I am very bullish. And here are some of the ways to still play it. And I keep using the expression, make hay while the sun shines, and I mean it. So we've got good news. Bonds should start to stabilize, right? Now that yields fall, and which will be good for rate sensitive plays, right? I still very much like, all things being equal, the home builders and the material sectors. I am less excited about IWM, but I do concede, yes, IWM. I'm very, very sure that even if the 30-year softens, it is not going to mean there's a stampede for new home buyers, and it's going to, lift up the absolutely on the ground housing inventory. Nope. I'm just talking about these are going to do great. And if we look at every single one of these stocks, they are all up with the exception of RKT, which is most highly tied inversely to the 30-year. And as the 30-year goes up, RKT goes down. But the rest of these have all, some of this has gone sideways, but oh my God, all of these have done well since I recommended these. Remember in March, April, May timeframe? So they're still working. Okay, some are much, much better than others, but the point is they're still working and it's kind of freaky, even with the yield spike that we had from September 18th into, well, last week. All right, or into the election. Bad news. We're still going to have an issue, I think, on the value of the dollar, which is not the price relative to peers, which hopefully I explained a little bit, but relative to things, right? Things that we actually consume. That's to me anyway, a reason, one of the reasons to still be very bullish gold, silver, agriculture, or raw materials, commodities. Again, I don't think that's going to go away. I think that's just going to size up. I really do. I think they're just going to size this bet up. Now, I know we talked about coal. That was actually, sadly, I missed that into the Trump election where they did massive buying into the big coal names. I think that'll continue. Nat gas, this is client Ann has been on this for many, many months. And this is still looking good. And the players, they did have a big bump down last week, but as far as a trend, I did post something a month ago. I said, keep an eye on this. It's a little early, but it's not a chase, right? These are when I posted in swing, it's because it's going to be a trend at some point. And I said lumber looks higher and the relative plays are very hard to play, but keep that in mind. And I think we're going to need to add steel, aluminum, and copper again, right? We've done this before, this dance. But as dollar does devalue, these things are going to become more and more popular. All right, so I'm not going to go over my comments on Vicente. You can read them. Here's the week ahead. It's a short week. I'm going to give the Friday everyone off so we can have that kind of 4-day span. And Hans and I are not going to do the options power hour this Wednesday. We'll pick it up when we get back. And this was last week's, definitely a good one. Decent call that the video would go, nowhere fast, would not go anywhere fast. Anyway, the deep in the money calls that I spied of size, remember 149 million deep in the money, they were protection. And I can't believe it, but when I actually looked after the fact, it's 6% move, right? It was crazy. It was 140 to 153 with 6% in either direction. Anyway, Datadog and SaaS plays are still the focus. This week we have a little bit of low volume, first of all. Fed minutes, confidence survey, new home sales, which we know is going to be on the ground, personal income spending, PCE, which is all kind of fine, and GDP revision, which should be down because of hurricanes and weather and such. So I'm not too excited about the market doing anything dramatic here. All right, that's it. Underneath, I would need to remind, underneath the market has had buying. And on Friday, it was systematic buying, not choppy at all, but very, very thin. And all this stuff that I've gone over is still working. So let's go take a look and hit me up with your questions in Zoom Q&A. Rithika is not here today. Archana and Mikey are, but don't hit me up, please, in chat. I can't see it, but Zoom Q&A. All right, so this is Palantir. It is still moving higher. It digested a little bit here, right? A little bit here, even though the owner sold 400 million or something, which was like the year's profits. It is moving higher with a $75 price target. Mara is also continuing to move higher. You know how I feel about Bitcoin, but the miners that, or I should say, the play that had not yet advanced and had the most advantage and most Bitcoin. And I put some fundamental stuff in swing. I put some Bitcoin analyst analysis, whatever, in swing. It still looks good. It is obviously working. This is QBT. I can't believe it. Mikey had just talked about the quantum ETF and the related plays. I knew nothing about this because for the most part, I ignore stuff that's low float, but that's for day traders. Excellent, excellent. And I have to congratulate Wolf. I forget who asked about this last week. I'm like, I have no idea unless you know something. And she's like, executives are buying. I'm like, and she's like, three of them. So they're coming in. And I'm like, well, that's why it's obviously up above to 690. That thing went up 32%. Congratulations. I mean, like, wow. All right. So she spied that and did a great job of catching that move from the open. She asked me to size it up. I'm like, I don't think you should buy all-time lows unless you know something. Well, that was the something that kept it going. No question about it. All right, so the quantum space is having a good time. I still think Bitcoin pushing up against 100,000 is not the end. It's more likely 130, 135. And Mara is the best catch-up trade. Options are still below the gamma squeeze level. I consider the gamma squeeze level of 200, and this is still in the 150s. It's stupid expensive, but is nonetheless not MSTR. This is another name that just triggered above. It is Magic Investments. I've been kind of watching this one. It's pushing higher. I can't even remember why I liked it, but it's one of many that are pushing higher. This is one of Alexander's, and I said, ooh, nice trend line. In fact, he gave me a few, he did two deep dive reports this weekend, and I sent him charts on both. They were both gorgeous charts. So if you're into the biotech space, go to Kenton's Corner of Biopharma, and you will see his two recent deep dive reports on two names and corresponding charts. No options. Hood, of course, it's all related to the Bitcoin and Bitcoin transaction mania and gold. All right, so that was the risk. That was the risk. So remember I had the gut instinct, nothing but on this day, literally Tuesday the 29th. I'm like, it's like that in my stomach. It doesn't feel right. Well, okay, protect for 2 weeks. I said now a little bit more. And then we had the escalation, and that was just all there was to say about that. It's a big deal, and we bounced 1, 2, 3, 4, 5 bar rule, and then we bounced right into 250, and now we're coming right back down. So there is a risk, and I showed you that, of having this head and shoulders kind of vibe. So that is a very bullish candle. It closed above the 10-week, unlike silver and miners, but that is right back down to the fold. So look at this. 244 is literally, right? That was the original price target. And then I don't feel good. Let's do another week. So it had no support here. It just turned on the escalation. Remember, Russia fired a new missile into Ukraine, and it could have been nuclear, but they withheld, they had restraint. I don't know if they're going to be so, I don't know what the word is, but restrained next time. Anyway, this is back down, having a little bit of a head and shoulders feel to it. And here's your TLT, which has gapped up, but I still don't trust it. In other words, I still see that 10-year T-note future tag, and I want that before I'm really kind of satisfied. But in the meantime, Basent is causing the reason here of an initial pop in bonds. But remember, this is a lot of congestion right here. There's a lot of work to get back above the 10-week, all of this jazz. I don't know. Something just doesn't feel right about this. So I don't think this is the pop, but it is a gap up on a weekly. If it holds, it's pretty impressive. On my other time frame, I had this 89.54, and I said if we break 89.54, we're going to go down to 88.5. Remember that? That's monthly. That's really where I see support. That's the tough thing. Anyway, I see support at 88.50. Deutsche Bank. I know this is one that Tim and I don't trust. So I do tend to follow this, and it definitely did a fake breakout, but not really a fast failure. It's kind of a slow failure. So it is back down to the 200-day, which I expect this will start to flatten out, roll over next year. With semis, by the way. AZAC, I don't think they had earnings. It's just one of those kind of building material plays that I happen to like. This was the prior high, and it is literally popping higher. And if I put it on a weekly, which is really what I should have done, this is the prior all-time high. This is part of building materials. I really like this sector. This is what you get. Oop, that's weird. Why did it give me 2? Just give me that. All right. All right, VIX is still on the floor, which means market is bid. Dollar yen is softening a little bit, which is part and parcel, right? Bonds and yen move together. So bonds are moving higher with yen, and the dollar yen is rolling over. It did have this kind of evening star reversal, petering out, very likely heads back down to the 200-day, which is going to be the 10-week, which is going to be, a really, really big tell because that's yearly. Is it going to stay? Is it going to come back down and then move higher or roll back over? Yeah, I'll show you the rest in just a minute. Tesla is right up to that 359. I had mentioned as a way to play a call spread because it was so like, look at it went sideways, sideways, and then it moved higher, little bugger. And here it is, 359, retagged, needs to stay above in order to move higher. So this thing is really, really in play, right? So I said anything above this 237, that was back then, but I'm talking once we got above, we can kind of stick that landing, 271, we're moving, we're moving. Zoom, Peloton, stuff that has already really, really trend reversed after a protracted downtrend. We've got this gorgeous scoop, right? Came back down like, that looks gorgeous, right? Literally on the 100 week, it's moving higher, right into 91.46 though, careful. By the way, MDB is moving higher. This is another one that was a SAS reacceleration play. 1, 2, 3 kind of looks like Datadog, and the rest where they just went straight up. They will come back down because that 200-day is not done basing. So no, this is not one of my favorites, but it's definitely one I know Archna has. UPST was one also recommended, not just from the day that we had this great chase, but I said, oh, now it's actually forming a scoop pattern and looks like it wants to take off again. And so this is slowly but surely working higher. Peloton, also same thing with Zoom, right back here. Trend reversal, digested beautifully above the 10-week, got up and had to go through some shimmy with some earnings. But look at this, you're not worried about this when you're so well defended above this 10-week. And then this happened. This happened, which was not just a whole bunch of SAS reacceleration last week, but also David Einhorn saying they did a big investment when it was about 96% oversold. So yeah, this is also in play. MP looks like it's coming up off the bottom. That's not a China play. It's rare earth here in the US, if you have any interest. But there was something I was looking for, and what the heck is this? Oh, because I had to turn my computer off. That's why. All right, so Sava had obviously missed their FDA. Oklo is under some, Ann mentioned this. Is it Carisdale? Some short report, maybe one of them. Citron, Carisdale, I don't know. No, Citron's short MSTR. They were long, now they're short. All right, so Oklo has some distribution that's going to be coming in. Zim, by the way, did a complete bull trap and rejected. I wouldn't touch that. We basically have continued selling in the defense contractors. MSTR is taking a big break. Now remember, this was freaky that it hit the 529.87, actually overshot on the daily to 544, and then did a complete 31% peak to trough reversal, sitting here. If it breaks 399, obviously it's going to continue to test and roll over. That's a very big bearish expansion candle. Taiwan Semiconductor is underneath the 190, which is just translation. Semis are still not getting a bid yet. We'll look at the rest. I'm going through what I'm going through here on my list of things that mattered. I was asked about IP. It still looks great. Just put it on a monthly. You're in trouble right now. So this is quarterly resistance level, which means that's going to be tough to get above. So think 60. If you have IP so extended from the mean and it's hitting a quarterly level, take care. So IP is definitely coming up against a interim resistance level, and it's a big one. So you're just going to have to deal with that. You might get some shake and bake. Someone did a a write-up on Oracle recently. Anyway, this was all I could say was if it gets and stays above this line, it's very bullish and it continues to move higher. We definitely have some reversals in the safety space, which is, this is XLP, right? We had a big, huge move last week. Not software infrastructure. Here's your EL. So XLP is a whole bunch of stuff, but one thing that had moved last week of size, come on. Down is bouncing. No, there was another one. What was the, it wasn't EL. I know that this is Archna's. So this is Archna's, and there was also some buying in here, I think, insider buying as well. You'd think I remember, but I can't remember. Yeah, we know Walmart, Costco. That's Procter and Gamble. Target bouncing. They were selling some puts already. This is above, I'm not, not so excited about that. But there was one EL. I remember that EL. I think that was Archna's. Anyway, there's Archna had asked about a few retail plays as well. And retail, that was it. So retail is spiking higher this morning. We've got Black Friday this week, so of course, but that was it. Yes, sorry. So XRT was one of the sectors that I had written about for a rotation, and it's up 3.5%. And you can see underneath XRT, you got pretty much everything moving. You got Amazon, Walmart, Costco, TJX. A lot of these are swing or trend longs for folks. Orly is a trend long. The Target's having an oversold bounce. Carvana is a freak of nature. Ross Stores also announced last week they beat. eBay's doing well. Tractor Supply, of all things. I'm serious, it's not too bad. Chewy, careful, but it is moving higher, no question. Anything above 28. Remember talking about that. BJ's, of course, if 80, then 100, it's 98.66. It's like great. Anyway, lots and lots of names, including Abercrombie, which bounced higher with Gap and is now running with the wind. So you can see that now retail is getting a bid, right? Did you see any red here? Not one red. Look at that. If I go from the biggest, is this Build-A-Bear? No, this is not Build-A-Bear. Anyway, if I go, no, that's BB. Never mind. Oh, we got two, Gap and Macy's. Oh my God, is that too funny? I'm like last week. Yeah, I'm not excited about Macy's, but this is the retail sector that is moving higher today, clearly. And Nat Gas, even though it had a shake, it is right back into baking up some moves here on this trend line, which, as I remembered, I don't like UNG, but it's very chartable. So I'm going to show you right from back here. It is definitely trying to get back above. So it's in the 15 area. And I said, it wouldn't surprise me if it makes it all the way back to 1677. We are in, for lack of a better word, really a euphoric market. Here is Tim's arm, which is trying to do a 180. I would say probably AMD is also going to try and do a 180. Yes, XHB, you know how I feel about that. Rate sensitive plays are definitely moving higher. XHB, XLB, XRT, that's much sexier. I'm not excited about Nordstrom or Macy's, sorry. Or oversold QS or oversold any of these things that just aren't viable, right? But there are Housing related plays I did recommend back here that are doing phenomenal, and they're coming up off the bottom. And the idea was not that they were fundamentally great, but that they were tied to housing and this oversold kind of reversal. And there's Zillow, right? That was the exact same time. Look at this gorgeous bullish engulfing. And then Redfin is the one that is kind of on the ground. It got up and then it came back down. Anyway, those are the small cap plays, for lack of a better word. All right. There's basically bounces. Who's got the bounces? Except for gold and silver, which came back down. Apple, like I said, I'm not worried about this one. This is just not worried about this one. So Apple's moving higher. Who asked me about that? No, that wasn't it. Doesn't matter. And NVIDIA is not. They're literally selling NVIDIA off and buying everything else. So we'll see if that sticks, but obviously semis will not bounce until then. Volatility of NASDAQ has left the building. NVIDIA is on sale. Remember, it was here already before it did earnings. Hasn't even broken the 10-week. I would say 137 is coming in, and that gets supported. And SMH is not taking it too hard. NVIDIA has what do you call it? Diverged. And you got a whole bunch of green on the screen from Micron and Intel. Oh my. So even seriously, AMD up 2%. So it's really an outlier, and it's an obvious one. And I don't think it's going to last. How's that? The stuff that is pushing, remember the Intel just needs to stay above 22. It's trying. Look at that. It's trying. This is the 30-year. It's still above the 10, the 200, all the moving averages that matter. You get below 4.4. Hold on. 4.44. We get below 4.44 on the 30-year. Oh boy. Remember this trend line? All right. So expecting it to come up from that time for a bounce, no, time for yield spike call the morning of September 18th. Okay, I expected it. Okay, we digested, but then we gapped above and kept going. And we're basically right where we were. So pre-election, 1, 2, 3, 4, 5, 6 weeks, we're basically going sideways. Now, bonds will only get a real bid once this gets back inside the 30-year 4.44. So the 30-year yield, you really want to press the bond trade higher, and the home builder refi theme higher. You want this to get back inside and fall. What's more likely to happen is we have a bounce to fill that gap, and then it rolls over. Never easy. It's never like so obvious. Well, that's not true. We knew Tesla was going to do this, and we knew Bitcoin was going to do that. Right? So those are the obvious trades. Now it has not tagged 100,000. What a tease. What a total and complete tease. All right. So with the dollar coming back in, remember that 107.5 area, it literally tagged 108 and then digested 107 and came back in. So the dollar is a little weaker with yields, and the market is all excited and gold is not. And by the way, that was the gap fill on the Qs. We did tag it obviously on Friday, and then we moved higher. So that was one thing. And then we had already gotten into this one earlier. So anything above was bullish. And once we get back below, it's bearish. Oil, little shake and bake. Here's that dollar on the weekly. And here it is on the daily. You can see where it's gotten a little shy, got a little excited. And here is, oops, oil chart, still choppy, choppy, choppy. And here's nat gas, right back above 3.4. Just when you thought it was gonna treat you, it tricked you. Just when you thought it was gonna trick you, it treated you. And this is very interesting to me, but I need follow through. This is the 10 and 2-year yield curve, and it is clearly rolling over below the 0 mark. We have just inverted. Like we were just out of inversion, like in September after the whole August, Braha, whatever, boot, whatever. It is back inside. So that is going to start to be a little ugly for banks, but I think it's still a little bit early. But if you want to add some time and you want to short banks, I understand why. It's just really hard to short banks when interest rates are coming down right now and interest rate sensitive plays are obviously bouncing or moving higher. So the small cap financials in particular, look at that gold. So this is this is the prior resistance and it turned tail strongly. Silver, miners less so because the market's up. Ah, look at this one. Remember I said this dollar yield ratio, very extended, and they came in November 1st, Fed pause, Yellen Yahtzee, and then that pushed dollar yields lower. And then we had this, kind of repeat back here in April, May timeframe. It got a little extended and they just, oh my goodness, market went crazy. And then July 7th, we had the big concentration risk unwind. And then that got defended August 5th. By the way, SPX is inverse here. So we've been moving, right, higher, 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 higher. And now this is starting to come back down. So right at the trend line, that is going to be important. And NVIDIA is obviously right back down to that 136. Didn't know when that was going to hit. I really did not. Nope, had no idea. But NVIDIA is finally hitting that 136. Now the question is, if it breaks 136, right now we're 137, so it's not really 136, but you get the idea. So the Mag 7 ratio is not cooperating, or I should say that's the wrong way to put it. The Mag 7 ratio has not pushed into the price target. We are still not here. And that's exactly where I still think we have to go before the weakness sets into the market, but NVIDIA is getting hit right now. And other semis are trying to pick it up. The SaaS reacceleration plays are still working. The warm summer housing market call, for lack of a better word, is still working. Gold and silver are shimmying, and there isn't really anything new. Bitcoin is taking a pause. Value right now is outperforming the Qs. We had a huge basis point spread last week on that. And SPY went right back up to the prior high, like literally post Trump win. This is the November 6th. And then Thursday, the 7th. And then we topped out literally on Monday. And we have been chop fest. Just gross. What the? And your 5-year, 3-year has turned sharply lower. Oop. Yep. So, thank you. All right, let's go over the SaaS stuff. Oh, very good. Archna sees it. She sees it an opportunity. I'm telling you, she's good about that. So she did sell. She's long target from that oversold level, and she sold put spreads on EL. Well, they got to be full value at this point. All right, so that's a very, very, very nice job. Now, big picture, let's go over the ETFs and go over some of those SaaS plays. We've got nat gas continues to be the sector rotation with all of its plays that we've already kind of gone through. If you want to go over any in particular, of course I will. Interest rate sensitive just, interest rate sensitive spaces, financials, of course, small caps, but home builders, obviously I go with what I like the best, but XLB, XHB, had mentioned XRT likely moved higher. I like that better than just doing small caps, if truth be told. So small caps are up 1.35. I know lots and lots of folks like that. Retail is up 3%, trying to hold, but it's coming out of this base that I like. So when I see a base like this, ooh, I like it better. I just like that better. All right, so XLE is not doing anything. Yep, not a playa. This is home building and this is home building. I just have both ETFs for. This is retail and this is regional banks. Regional banks have a lot of unrealized losses, right? So they're liking falling yields. Why is ARC gonna whatever? We have a lot of biotech bouncing too. Looks like an oversold bounce. And we got the quantum ETF, which literally was not even on my screen until last week when Michael went over his quantum thesis and plays. IYT continues to press higher. Trucking recession looks to be over. Hitting its head at 92.20 for TLT. Let's go over a few indicators. But yes, I can see IVB coming up sharply post-Kennedy sell-off. XBI post-Kennedy sell-off. By the way, I retweeted Shanahan saying our goal is not to pummel, Pfizer and, make their stock go out of existence. Our goal is to just have them do better, job and make their company more valuable. And for some reason, that's kind of helped this kind of sentiment of an oversold bounce. But it also, honestly, they're also betting that the Senate will not confirm RFK. Part of that, it's oversold bounce. Shanahan saying, really, we don't want to, hurt shareholders or the stock price. We just want them to be honest and be transparent and deliver better products. So anyway, we'll see. Let's go over some indicators. SVXY is the inverse VIX, and it is still, I know there's a lot of stuff here. It is still trying to get above all the moving averages that count, which would be very bullish. And so far, that's bullish. That's the Trump, right, bump. And then we had a little bit of a thump. And now we're stabilizing. We don't see a close underneath this 50, right? 3 opportunities, hasn't broken 50. So it's still bullish. VIX is obviously fading, bleeding, however you want to put it. But let's take a look at the other stuff, which is very strong. Advanced decline. So I'm on a big picture and you can see this is a new all-time high. This is a daily high. It is way extended. And usually that means, it's going to come back in, but it is what it is for right now. Put flow for Citibank. Ooh, thank you for showing that. Hold on one second. Let me just do something real quick. They do not like it. They lose their cheap and steep and all that jazz. So here we go. We're way extended here in advanced decline. This is NASDAQ advanced decline, right? We're still, look at that. You can't, it's a 45-degree angle. It's above the 10-week and it's a big bullish engulfing and we gapped up and we're probably going to come back down because that's wicked extended. But that's all I'm saying is it's still in play. It doesn't mean the market's topping right here and now. Breadth. Oh my God. So we're not only sideways for a few weeks. Yes, that's the pullback into Trump and then support, right? That's advanced. So this is cumulative 4-week new high, new low, and it shows me breadth. And this was where we closed last week, which was bullish. We've gapped above. We're probably going to come back down and break that because it's really elevated. But right now, look at this. There's nothing to do here. This is just the market euphoria represented in these all-time high prints for breadth. This is way the heck back in November of 2021. This is November of 2024. So the market breadth is still bullish. Very much, an intrigue here of when it's going to turn, but we're not there yet. All I wanted to say. And then this is what I meant by systematic buying. Look at this. If anybody has followed me for any period of time, I'm always looking at this puppy. And it's usually kind of like, hold on. How do I show you this? Okay, can you kind of see, like that's straight up almost panic buying. They're chasing this. This literally is, can you see that this rate of change is going straight up? That was September 11th when Jensen from NVIDIA came out on CNBC at 11 o'clock. And my God, they just started chasing it and the market hasn't looked back since. There's August 5th too. August 5th is right here. But the point is, can you kind of see these wiggles, right? You can kind of see it comes back down. It's a little bit too parabolic. It has anyway, this is normal behavior. In my opinion, this is normal behavior. I can see the buying, I can see the selling, I can see the smoothness of the curve. And guess what? This is exactly right before Tuesday. Market closes right here, but the buying was clear. Look at that into the 4 o'clock hour. And then what happens? We find out Trump is elected and the thing just keeps going, right? Oops, sorry, hold on. I got to bring back down because that looks a little bit crazy now. This, where heck my stuff go? There we go. I've distorted the whole look because I want to show you something. This is, look at the stair step. That is programmed buying. There's just no other way to look at that. Look how exact that is. They are just drip, drip, drip buy orders into the market. I got this on an hourly. Can you just look how gorgeous that is? That's buying. That's programmatic buying. That's why I said this is euphoric. So we're still buying. We're in all-time highs. Breadth is obviously gapping higher on the descent. Advanced decline is way extended and very likely going to soften a little bit. And general advanced decline is bid. VIX is bleeding lower slowly but surely. And SVXY is just dying to get above this junk. Let me clean it up. This junk, which would be, what's the definition of junk? Let's call it 53. Yeah, I'm going to get rid of that. I'm going to put this here. We get above 53, market's going to go mad because VIX is going to be on the ground, all that stuff. But right now, we are extended. So big picture, this was August 5th, saved the market. Otherwise, we'd be at 4,300 right now, but we're not. And they keep buying and they keep buying. And the options just keep getting accumulated and puts keep getting sold. And that's why you have, stuff breaking out higher, even though the 10-year has been here before. 1, 2, 3, 4, 5, 6. Like it's really 5 weeks. And this is all reduction of regulations, pro-growth policies, and buying. So that's all there is to say about that. All right, Citibank and XLF and all that jazz. Well, XLF is a lot of big banks, not just banks. Yeah. Citibank has, oh, sorry, flow. Oh, it's got some flow, put flow, a little bit of put flow. So this is one that I will short in a New York minute once I see that the weakness come back in again. When this sells off with gusto, man, but it is also held together by the market animal spirits. And right now I put this on a monthly chart just to kind of see. Remember, this was August 5th. Talk about lots of support. Oh my God, so oversold. It was ridiculous. And then this is the 50 week. It is so extended from the 10 week, from the 50 week. It comes back inside 69. It's a good short. It comes back inside 65. It's a good short. It breaks back down below 60. It's a honking big short. And then if it breaks back below 55, it's done. Really, seriously, I will be really, really like, this is one of the banks I watch as a tell. Deutsche Bank for Europe is one that I watch as a tell. Both of them, I think, are just really, really important tells. But right now, what's happening is we've had this big old gap up, and now it looks a little bit sideways with our, favorite names. Let me show you. Palantir, of course, is a beast. Bob, a little bounce. PayPal moves higher. Google, okay. But Microsoft, a little red. Netflix, ooh, careful on Netflix. Little evening star reversal here on the daily, so nothing dramatic, but it means it could be very extended. Profit taking kicks in below 890. I mean, look how extended it is from the mean. Has it done anything wrong? Heck no. But it made way too much money from that boring fight. So if you are endeavoring to go short, this is the first price target. That's the second, probably overshoots area kind of thing. 1, 2, 3. Hold on, let me get this right here. 1, 2, 3. If then, this has to come back in, right? Slowly but surely. Let's see if there's any flow here of any. I can't tell. Today they're not doing anything like that. They're just buying the near duration. So hasn't done anything wrong, and yet it's just extended. Oh, sorry, let me get that out of the way. All right, so put flow for Citibank coming in. You've got your target, your EL. We've got, oh, what'd you just show me? Gold something chart. This is the, why doesn't it look better? On my screen, it's just ugly. Why does it do that? Mikey, what does this mean? I can't show it very well. For some reason, it has this ugly look. I mean, it's, using your settings, that's so cool. I can't read it though. It's all blurry. Look at that. I can't even make it out. No kidding. It's my gold. I want to see this better. All right, we'll discuss. You'll send me the link so I can open it up and take a better picture. But for some reason, when I hit copy and paste of your chart and put it in my Snagit, it looks awful. Awful. Anyway, Netflix looks like a short-term short, just a chase. Thank you, sir. Gold, I mean, Apple's hitting its head. Impressed by GM, honestly. Remember that was a swing and then it pulled back, and that was August 5th. It took forever, but once that thing broke out in October, it has just gone straight up. TJX is moving higher, which you know, with BJ's. I like both of them. You already know that. I'm not crazy at all about banks here. I think they're just an accident waiting to happen. Don't feel comfortable about banks here. Way, way, way extended. All right, so IGV. Let's go, because I meant to do that. Google having a bounce at the 200-day. Lots of green on the screen. Oil and gas, not really feeling it. Tesla did a 180 because it hit that 359, I swear. All right, so the IGV plays, right? IGV is the kind of the software, bunch of the SaaS names in here. Another way to kind of look at that is to go over to also IPO. If you recall IPO, that Renaissance ETF, and you can see some stuff that is moving that we've talked about, but just kind of be careful. 91.5 on a gap up extended. The mean is down here about, not about, the mean is 78.5. So we're at 91.5 and the mean is 78.5. That's your risk right now. If you're long Zoom, I would say Peloton's probably going to look, nah, Peloton looks a little bit better, but yes, right now it's trying to get above 982 and the mean is like 750. MDB, 3 days of straight up. Datadog had this, remember Tuesday, recommending that in the morning, and then at 1, 2, 3. I mean, this is like in your face. It went right above the 150. I think that's extended. That's just me. You know, team also didn't stop. It pulled back shallow and went higher. Twilio, same dang thing. Shallow pullback and went higher. Didn't even come back and fill the gap. Like this is euphoric. This is not normal. These are people off sides who are trying to get in because they weren't. You've gone from 71 to 108 in the span of 1, 2, 3, 4 weeks and a day. It's just a lot. All right. Silver's getting hit hard. I'm really, really still this 27. It's kind of like bonds, right? So even though we had a bounce in bonds, I still don't think it's done going down the TLT. Even though we definitely had a bounce in silver on the Russia missile in Ukraine, I think 27 is still price target. All right, and this won't make any sense. A lot of this is paper gold, right? It's not real gold. So the fact that we're forming a head and shoulders does not mean that this is done, but it means that there's still some funny business here in the gold and silver futures. And this is just a reflection, but this very well could be a head and shoulders top, brings it down into 230 area. It could also be a head and shoulders continuation. So here's the way to play it as far as I'm concerned. This was a big drop. Remember, I was like, ooh, okay, that's a cradle formation. That's true, but that was a gap down and boom, got supported because of Russia bombing Ukraine with a new age missile. So that made sense. The fact that it's coming back down and the threats haven't come back down is just kind of indicative of the fact that this is the paper market, people, not physical. I'm gonna have to ask George about this, but now that it's gotten above that trend line, SYM looks really good. He has a fundamental take on this. That's something I can't, or don't have time. Don't have time. I'll ask. Unity is a very, very strong reversal candle. I will give it that, but right now I think it's done. I think it stabilizes. It's just 1, 2, 3, 4, 5 bar rule on the daily. The 200-day is completely descending, not flat, not ascending. So more likely it does one of these. It's a very, very strong. I don't have anything on here. I have nothing on here. This is a massive reversal, no question about it. But it wouldn't surprise me now that it's Keltner channel kind of thing. It comes down to 23. But hey, these have not in any way, shape, or form come back down, but they're all above the 200, which I really like, right? So that's why when Archna first liked the team back here, right here, I was like, okay, it doesn't excite me, but it's coming out of a Bollinger Band. I like the technical pattern. It's got a 200-day price target. That was all I had. It went sideways for 3 weeks and then announced. Remember ESTC? Elastic, I had no interest in this either, but it was part of that SAS play, and it did this, right? Datadog. I liked this because why? Chop, 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 all above the 200. Look at the 200, right? I love that one. Now, did I expect it to go straight up like this? Absolutely not. But MDB is below the 200, right? Unity, I'm sorry, it has a descending 200. Duh. MDB has a descending 200, so they're going to have much more work. That's an interesting one. Stopped going down here. This is ELF. Big, huge shake and bake. I'm assuming earnings. It just gapped above 128 with a nice scoop pattern. I normally would not have looked at that, not even a little. And somebody's coming in with a one, it looks like a call spread, 125 by 140. Yeah, because they've got nothing otherwise. It's definitely the biggest one around. Look how that sticks out like a sore thumb. I don't think they're rolling from 125 to 140. No, I think they're playing a call spread 125 to 140 on ELF. Oh, generators. So to go along with the theme of nat gas moving higher, natural disasters, all that jazz, I think still, even though it's not a great options, market or tell right now, generators are still, oops, I'm gonna show it a little cleaner. Generators are still looking very good. Remember that big thick line? It got above on this beautiful cradle formation on a weekly, and then it got above. It got in play literally on 10-4. Yes, it was after Helene and such, but the point is it's still in play. It came back down, tested, moved higher, sideways. It's still in play. So Generac still looks like a bottom fishing play in the same way that, remember, Square was also, I thought I had a thick, thick, thick line. No, I don't. Bummer. Oh, that's way the heck up here. Never mind. Andre, LAZR. Woo! I don't know this one. This is a what? Auto parts. No. So here's the same thing I said before. This is an oversold, there's no question. Prior, it looks like a SPAC. No, it just came in 2021 at 150. What? All right, I know nothing about this one. No lines, got nothing. I must have a line. Wait, you must have asked me about this. All right, so I know nothing about LAZR. It's auto parts, that's all I got. But I have this thing, right? Two things. One, you don't buy all-time lows and you don't short all-time highs. Now, unless you know something. Case in point, I said that exact thing right here, right? To whoever asked about it on Friday. And she said, but three executives bought a whole bunch, right? So that's insider buying. I'm like, oh, well, then you know something. You're like, at least you have a reason to buy it. But otherwise, there isn't a reason to buy an all-time low. And that would definitely qualify. Second thing, this did a recent stock split, right? So $9.44 cents per share. You really have to divide it by 15 because it just did a recent stock split. It's really a penny stock. It's 63 cents. I want nothing to do with penny stocks unless you know something. Hey, Alexander, good morning. So Sava, ooh, SRRK. Okay, that's a new name. So he's saying SRRK has a better therapy for spinal muscular atrophy than BHVN. And BHVN reported and it was not good. SRRK was one of my recs a while back. But they might have reported that it's not good, but look at this. It got defended. And look where it got defended. The 50 week. And it's above the 200. So it couldn't have been that horrific. All it did so far was, hold on, fill the gap. All that has now been filled. So it got supported. It's back above the 200. You can see the kind of whoo, alley-oop. And this is bigger picture 50 week. Hit me up in Zoom Q&A if you have any questions. It's Monday. All right, so look at the flow on Hertz, please. This is Archna saying, oh, ow, that's really in a hurry. All right, so here's January $6 calls that have come in. Can I just tell you it's cheaper to buy the stock sometimes than the option? Just saying. Really, this is not, I don't recommend this, but I understand why some people would do this, is it's always about leverage. But honestly, this is 20 by 25. It's a 5 cent slippage. Why? Maybe it doubles. Okay. And it's trying to do something. I'm not quite sure what. It is definitely coming up and it's already cleared the 10 and 21, critical for a trend reversal. And it digested last week, which means it came back in kind of like Mobileye, right? And now it's trying to get back above. This is very important. Where did it open? It opened at 421, hit a low of 420, and it's got to stay above 419. So it's in play, and that's fine, but it's wide, it's cheap. I just think it's easier to buy the stock. It's better to buy the stock if you're chasing something like this. You got a little bit more control. The problem is this is a descending 200. This is still a bankruptcy risk and I'm not so crazy about this unless there's a reason. Is there a reason? Like, is it short covering? Is it insider buying? Is it earnings? Is it, I don't know. They're gonna, hurricanes are actually, sadly, floods and hurricanes and fires and all those natural disasters that wipe out inventory are very good for two businesses, right? Generators and replacement vehicles and rentals. Another business, do you remember the Copart? Do you know why I recommended this as a trend? Don't laugh at me. You know what their business is? Salvage. So they made a lot of money. I hate to put it that way, but they made a lot of money from the disasters that happened in Florida, Virginia, North Carolina. They take the destroyed vehicles and such. They're in the salvage business with wide margins. So that was why that was recommended a while ago. And Swiss National Bank bought some. That was the other reason. So sometimes that works, right? Remember CPNG down here? Somebody was buying massive amounts, like 33 million. I remember this. It happened to be Druckenmiller. What's the biotech name? I can't remember now. TGTX? Same thing. It was a whole bunch of big hedge funds came into this play. Like, that's a reason. Copart actually has a good business with good margins, but it was Swiss National Bank that got me interested in that. So those are totally different reasons, but caught them early enough anyway. It was in this neck of the woods. But nonetheless, this market is really, everything's moving higher. So it's kind of hard not to be moving higher with it. But Netflix, nice little intraday short, right? So that little intraday short is working. Pretty, pretty, pretty. I don't have very many shorts, right? You gotta take them when you see them because they don't last very long. But a break of 890 brings 875. You get down to 875, you can push into 848, and it's working. But GNRC and Copart, those are kind of hurricane names, natural disaster names. I don't know, long story short, to answer your question a really long way, I don't know why Hertz is moving higher. Just don't know. But somebody just plunked more than 500,000. No. Oh, that's only 50,000. Okay. That's not a lot. Mm. Also flow. Yep, I'm looking at this. Tesla, hold on one second. Look at the wide bid ask, 67 by 80 cents here for the December 50s. December 50s are obviously out of the money. And AAP. All right, so let's talk about this one a little bit for those who are interested. AAP is not Orly. So I have Orly trend long. Look at this puppy for a few years. This is the replacement cost to keep your car going. They actually have good management, good margins, but also the sector. I believed back in COVID down here, because inflation was making basically the asset in your garage or on your driveway the most, the most valuable thing, and it was really hurting affordability for cars for those who couldn't, wage earners who couldn't afford new cars. They were going and replacing, and the cost of replacement parts also inflation. This was an inflation play. This was a affordability play. This has worked great. AAP is horribly managed, and in fact, I liked it here for this inverse head and shoulder, right, which was very bullish. And then we got an announcement of Starboard coming in with activist, intentions of breaking it up because it was just so poorly managed. So one went up, 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 and one went down, down, down until the activist involvement. Now this is really oversold, I will admit. I don't want to buy all-time lows just because 26, whatever the high was here. Just figure this out. 244, and the low, and we're looking at 44. But if there is activist involvement, right, or if they figured out a way to, stay viable and it starts to get moving, maybe, but I don't know any reason other than flow. That's not enough for me. There's got to be more than that. So if you're doing this, here's your big picture. The low of 35.59, 35.61, same idea, has to stay above. So if you're selling puts or anything like that, it just, there's no wiggle room. It has to stay above this 35.5. So if you really, really want to play this, you're buying expensive puts, maybe sell some expensive puts with it, because it's way not something I would recommend with 10-cent wide anything. But if it gets back above, like look at this is the high, 45.45. If it can get back above this 45.20, it'll be on its way to the next level, which is like 54. But there's got to be a reason it's moving, or else I'm just not interested. Here's a, same thing. This is absolutely an oversold play. Only reason I even put on the radar back in this time frame was because of the 30-year looked to me like it was going to roll over, and then anything tied to housing would move higher. And it did, but because it's in a protracted downturn, it's still like whack-a-mole for the hedge funds, right? So they just came in here and they whacked it again. So these are not safe as investments. The ones that I deem safe as investments are the ones that are breaking out of all-time highs. And there's so many of them, right? I mean, I went through and just the ones from last week. Right? Even posted this a little, and I know I post over here in trading room notes, okay? But I lifted some of this to kind of show, oh my God, SAS is just a show off. Started with Dash, went to Docu, Palantir had been in play for a while, PayPal too. Square was added, I really like that one. Team, Twilio, Mobileye, I forgot to look at that one. Datadog, oh, I gotta look at these right now. But anyway, long story short, this was the ones that are all broke out last week, all at all-time highs. Let's just like real quick, like CCJ was an all-time high, little digestion here, but last week, all-time high. BJ's, all-time high again today. TJX, all-time high again today. Love these. CPRT, all-time high again today. IBKR, a little digestion, but my goodness, right? NDAQ, which is also in the space, all-time high today. OC, oh my God, gorgeous. And even GLW is doing well, even though it's not all-time high. It was a few weeks ago. It'll get there again. Home Depot, all-time high again. Lowe's goes around for the ride, but it is in no way, shape, or form as strong fundamentally as Home Depot. Just saying. If you want to own the better of the two, this one much better. DBA, this is about ready to break out higher, but it hasn't yet. I'm unfortunately bullish this, which means I'm bearish the dollar. Anywho, MSTR playing some games at that kind of 400 level. Mara still moving higher very strongly. Datadog, oh my God, it's time to rest. CFLT, that was a new one. Again, all in that SAS space, MDB, CFLT, ESTC, they are still doing better. Fine, however you want to put it. So I'm still waiting for semis. I got nothing, right? We have not rolled over to the 200-day, which is down here, but NVIDIA has rolled over to 136. Now it's got to hold 136. And Netflix has been a great chase today. Look at that. Boom, right into 875. Gorgeous. All right, so no, I had to take your picture, Mikey, and then blow it up because it was so small. Yeah. One of those things, like if I just do a copy paste of your picture, copy image, and then I bring it over here and I hit attach, it's so small, right? I can't see it. So if I then hit fit to screen, I can't read it. So I think it's just something on this end. All right, so while I'm here, let me just show you something. I did a few, I did a quick view of the intermarket landscape that is still bullish. Let me just say I still have lots and lots of divergences, right? And the divergences look a lot like this. On NYSE, NDX, and SPX, they pretty much all look like this, where they're rolling over the indicator, but price has been moving higher. Now we're getting into a point where it's now oversold. Remember, anything below zero is also, careful. And this already fell. Everything fell, but price went higher. So it looks like it wants to move up. And they pretty much all look like that. This is the NDX one, right? Where it's been going sideways, roll over, make a lower high, roll over, but that doesn't matter. Price is still moving higher. So now we're making kind of sort of a double bottom. We have the potential to move higher. Same thing with SPX. We're very extended today on this gap up, but I'm talking about bigger picture. The indicators are oversold. The indicators are oversold. The indicators are oversold and starting to think about moving higher. That's melt up potential, even though we're so extended. And so that's why I keep looking at, not Netflix, which is a great duration. I mean, it's the only short I could find. This is buying, and this is systematic. Systematic? Computer. This is computer buying. You just do not get this. I've seen this. This is systematic buying. This is buying. Very hard to short when you have this kind of buying in the market. It means it's more melt up like. It makes me crazy, but it is what it is. All right, so getting back to this is a still huge divergence, and I want to point something out. This is RSP to SPY. It is literally cap weighted, the NVIDIAs, the Apples, the Teslas, the, Google, the Amazon, the Microsoft, and the Meta, versus equal weight, value, growth, value, growth up here, value down here. Value just poked out last week. Boom, here it is. Lots of room for this to make up traction and get up here. I have been pointing this out, but it hasn't done anything. It hasn't cared that, this is the COVID low when this indicator was on the ground. And yes, this means IWM, etc. I personally like some of the more selective sectors, right? I've shown you for example, XRT is breaking out higher. But the point at IGV has a lot of smaller companies. It can be tech and in small cap, by the way. But this is definitely the area that is obviously working right now, and growth is not. And what do I mean by that? This indicator, oh my God, look at oil. Is there news here that I'm missing because I'm talking about intermarket instead of looking at the news? And Rithik's not here, so I don't know. But if anyone sees news of size, please let me know. Like, you know what I mean, important news. All right, anyway, this is the indicator I'm talking about for growth. Oop, no, not that one. Right here. So I posted this that I'm expecting, if we're going to get a melt up, if semis are going to move higher into 272, if NVIDIA is going to move higher into 160, 170, this has to break up. And right now we're having value takeoff and growth is weak. NVIDIA is 136, not 146, which it was before earnings, right? Have we crashed? No, but we absolutely, you can see this rollover, right? So you can see how we've got weakness in this indicator, which basically corresponds with strength in that RSP indicator. And let me bring that back over here. And let me show you this right here. Oop, that's not what I wanted. I want that. That's the red stuff. I'll put it in yellow. It's easier to see. Yeah, much easier. So right now, value is outperforming growth. And you know that because you've seen small caps move higher, basis point wise, versus the spread in the NASDAQ. It's very obvious, long story short. All right, and then we get back to this chart. I'm going to ask right here, and you can see why we're moving higher. So it looks like we're going to get some more indigestion in the growth and some more support in the value. In the meantime, though, big picture, the options I just showed you, right? We're having systematic buying. This is the systematic buying that I'm seeing. Freaking A, 45-degree angle. Just, that's it. That's just systematic buying. And you can see the options market is still very, very bullish. Otherwise, you'd be rolling over, and we're not. I'm talking about with BXM. Very, very, very tight, 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 even if extended. Doesn't mean all markets are very bullish. This is the Nikkei. Looks like a head and shoulders, doesn't it? Could be a continuation and move higher, but it more likely peters out. So I'm not excited about all markets. I just think the US market right now is attracting some money. For how long is the question. And yeah, I have basically kind of looked at the dollar going, yes, the dollar is going up relative to peers, but not relative to commodities. And I talked a little bit about that, still looking for some levels here. And that's the yield curve, 2 and 10, 10 and 2, coming back down. At some point, it'll matter to banks, but right now, we just inverted. Nobody's really talking about it yet because they don't expect it to stick. So yield curve inversion will be a negative to banks. They like uninverted. They like cheap and steep. We do not have that today. So we'll have to see if that sticks. This was the gold bounce that we had. It's fascinating that it actually bounced right on my 0 mark, which is 0 actually. That's fascinating. But it has some work to do, as I mentioned. And bonds are still trying to, as far as I'm concerned, figure it out. So we're having a little bit of bounce, but we're still way oversold territory. It's hard to trust bonds. Bonds and yen are having a little bounce. It's hard right now to get excited about gold because it's obviously just dropped. 3150, I think Brian said, is kind of like the call wall in silver futures. It's having a really hard time getting above. And then we just got to really eyes on the prize here with the yield curve coming back into inversion, which I think will put some pressure on banks, but we don't see it yet. Interestingly enough, I compared the German 10-year bond with our US 10-year yield, and it has already rolled over. Germany's in such bad shape. I don't know how they can disguise it much longer. It's just, oh, the layoffs, the major companies that are just closing down, and the towns that are dependent on it. Anyway, the 10-year yield to me in Germany is very, very telling, and you can see how tight a fractal it is with the US. I think yields are going to come down and bonds are going to go up. I just expected one more tag on that 10-year T-note futures. And also, I've highlighted this before, it is a head and shoulders on semis. Let me try and make this bigger. That's a 2000 high. Looks like a head and shoulders, doesn't it? Which would be very surprising because I still see 272 for semis, but you can see it's also starting to roll over. So this is on a monthly. This is not going to be right away, but it definitely shows the momentum for semis relative to SPY is waning. So I am watching that structure very, very closely. All right, so semis are weak, but option market says they won't stay that way. The German 10-year yield is weak, which means our 10-year yield probably will not stay that way. The banks are strong, but the inverted yield curve says they may not stay that way. And basically, I'm watching for 107.50 on the Dixie. Above probably is fine till about 110, and then above 110, the market will start to feel volatility again. I have so far nothing in the indicators, right? Whether it be my VIX indicators, my option indicators, my breadth indicators, my buying indicators, they're all still bullish. It is, after all, the most wonderful time of the year. Hey, Ann, good morning. Oh, you have to ask. Thank you, Phil. Hold on, let me comment that. Ceasefire reported between Israel and Lebanon, according to Axios. Oh. All right, so first let me just deal with that headline and look at something. Let me just look at something. Not there. Um, Look at that's another reason also for gold, right? The geopolitical risk comes out of gold on mentions of peace. Hold on. Look at your nat gas. Yeah, and yields are falling. So hold on. Yeah, stable. Look at gold. I don't think the market is able to price in what next year is going to bring. And I don't mean wild cards like weather, something terrible happening, right? A big earthquake. I don't mean these very isolated storms which affect people and growth, and stocks that are very specific to the storms, but the big storms, right, of escalation with Russia, Russia aligning with Iran, Russia aligning much more with China. That's the BRICS has been picking up for obvious reasons. It's something that, in the former, that's what they wanted to avoid. Anyway, all of that is geopolitical risk that's very hard to price in. It's a wild card. Um, I still don't think gold should be ignored in any way, shape, or form. Gold, silver. Miners are very much tied to stock market returns, so that beta is very different than gold and silver. But I think clearly that's some of that is coming out, the geopolitical risk because of the news that Phil just mentioned, ceasefire reported between Israel and Iran. But there's no part of me whatsoever, and I am getting to Anne's question. There's no part of me whatsoever that feels at all at ease with what's going on over there. Nope, not at all. So as much as we're in melt up mode, and we are definitely structurally with solid flows continuing, there is, and it's true. It's not news, Mikey, but it's definitely part of why gold is selling off is peace. So and we got the Fed manufacturers, but that's not going to be enough. Okay, so getting back to the question that Anne's asking about, okay, so what about this whole market melt up and how do you feel about buying here? Stuff that looks so good, Costco and Home Depot. And by the way, we're getting some shake and bake in these places. For no. So she's asking me a really hard question. I'm going to say it. So she's saying, so how many of these things that you're mentioning would you buy now? Oh my God, what a question. And do you really think any of these will repeat double-digit returns over the next year? She's not talking just about SPY and, Home Depot and, Costco and CPRT and all that stuff. No, no, she's talking big picture, aren't you? No, I think next year is going to be a bloodbath, Ann. I really do. Yep, I really do. So I think we hold on to our hats right now while the market melts up in this, stupidity. And it melts up and it melts up and it melts up in, breadth expands underneath the surface, and all the macro, shops are saying it is so bullish for next year. And I don't think it is. I think we're going to have a lot more war headlines. I think we're going to have a lot more war headlines. And I think the market is going to get a case of vertigo and then look down. So we got nothing on the economic side right now that we're pointing to, right? Except for Doge, that restructuring, which I talked a lot about. I really did talk a lot about in that video. And the reason I talked about that was because I thought it was important to kind of emphasize, yes, I know everyone's very excited about Trump and, all that, but take care. We had this market melt up into the inauguration, we pull back, and that's important. I know we got lots of fractals compared to 2016, but this ain't 2016. We have had unprecedented advances the past 2 years on unprecedented monetary and fiscal policy intervention, actually for more than 4 years. But my point is the last 2 years with, the whole Fed and Treasury policy interventions. This could, by the way, this oil chart that I have on a weekly, that could actually get right back above zero. And I will be very, very bullish oil. But right now it's still kind of fading. So it's hard to get excited about oil. But I think this is really not appreciated any way, shape, or form, is that we're fake running higher on devaluing the dollar. And I think they will continue to devalue the dollar as they raise tariffs. So, and definitely foreigners will demand fewer dollars. And that's going to be a problem, big picture. I think definitely it's wonderful and needed to reduce government debt through fiscal restructuring. But we are completely dependent, this market, on fiscal largesse. So I don't think it's going to go smoothly. But there's just, as much as Trump is worshipped right now, ending wars, here are the two things I think are going to happen. I think he's not going to end wars. I think Iran is going to escalate. I think Russia is going to escalate. That's number one. And number two, I think this is very, very hard to pull off. Even all the stuff that's coming up around the January 6th election vote results. Oh my God, I never even knew that was a thing before Friday. And I happened to be getting a lot of messages on it. And I didn't know it was a thing, but it's actually a thing, that they could really, really fight his election results because they're so desperate to make sure he doesn't transition into power. I'm not talking conspiracy. I'm talking about a legal argument. It never even made my radar. Never even made my radar until Friday. Swear to God, I never even thought about it. Now I'm thinking about it. So I'm thinking about the January 6th, 2025 election confirmation. I'm talking about the transition of power and the attempts that will probably be made on his life. The escalation with Iran, the escalation with Russia. Russia's going to, probably nuke something in Europe if NATO does not go away, and they're not going away because UK and France and others are trying to push it. So I don't have any comfort right now for next year. I wish I did. US might be the best dirty shirt in the laundry, but once it starts cleaning shop, right? Once it starts actually taking that dirty laundry and airing it for everybody to see and trying to get rid of it in one way or the other, I don't see how the market's going to be smooth, operator. I don't see how, with honestly, blame Powell and Yellen as much as we want for all the inequality. It's Congress that forces these huge, deficits, and then Powell just continues to pander, and Yellen, continues to pander, and oh my God, they're trying to let the air out of the balloon so it doesn't burst. It at some point it becomes very unwieldy, and I'm at that point. I will admit that when I was writing all this stuff up, and you can listen, I don't talk politics. I don't talk about any of these risks. None of these risks do I talk about in that video that I posted this weekend. Right? That was a conference. I did a little presentation, things to consider. We're still trying to figure it out. We don't even know who the Treasury Secretary is, yada, yada, yada. But in the quiet of a Sunday, when I am focused on what does this look like really moving forward? What are the risks really moving forward? So that's how I came in this morning, going, okay, we're still bullish. You can see over and over and over again, I've got no reason to be bearish short term. But do I want to buy anything long term? Not really. So I hate that you asked that question, Anne, but I hope I answered it as honestly as I could. All right. And on that happy note, I'm going to wish you a great rest of the day. And we've got nothing, no reason to, what's the expression I've used before? Don't panic until there's a reason to, but definitely, I agree with you. There's just not a lot of double-digit growth that we're going to see next year in some of these names, but they haven't rolled over either. So I'll see you tomorrow and Wednesday. Just remember, Thanksgiving for those Canadians and Europeans that don't know it. Market's closed on Thursday. And then basically Friday morning is a half day and we're going to have it off. So I hope I'll probably be in the background. This is true. I'm going to check in, but the trading room will not be open. Let's put it that way. Okay. Cheers. Have a good afternoon.